Let's talk to Connor Campbell. He's a financial analyst at Spreadex. Good morning, to you, Connor. Right, we've got three big US
we're going really big this week.
reporting. Let's kick off with Facebook, up 6% in 2018. What's the outlook?
Yeah, interesting. It had a really strong 2017 as well. It was like 52%, and that's despite a lot of negative pushback towards Facebook. The fallout of the 2016 US election, its sort of public image suffered perhaps because, I think on the same day as its third quarter figures back in November, it was hauled in front of Congress to say that 150 million Americans had seen Russia-backed, news items through Facebook. So, it's had that negative public image that investors just haven't cared about at all, really, as bore out by its rise over 2018. In terms of news items this year, you can sort of see that there was a moment where things looked a bit hairy for Facebook in the middle of January. That was when it announced changes to its news feed.
Yep.
I think it was going to be, less media and business-focused posts and more personal-focused posts. And I think initially investors sort of balked on that and were concerned about will that impact ad revenue and ad revenue growth and things like that. But it seems to have, the sort of consensus is that it likely won't affect it too much. And if anything, in the long run, if Facebook can get the platform back to people posting personal information and things like that, well, that just gives it more information to pass on to advertisers. So in the long run, it gives them a bit more leverage with people that want to use the platform for their colossal advertising reach. In terms of its figures, back in November, third quarter figures in November, again, strong as anything, 47% rise in revenue to $10.3 billion. I think net income was up 79% to 4.7 billion. Total users was up 16%. I think that was year on year to 2.07 billion people. Huge figures, similar size figures this time out expected on Wednesday night. I think revenue is expected to be up 42% to 12.54 billion. Earnings per share up from $1.41 to $1.95, that's a nice chunky growth. And monthly active users at 2.17 billion. Very, very healthy. I guess the one Facebook investors have sort of not been pleased every time they see a slowdown in that ad revenue growth. So obviously from 47% to 42%, that is a bit of a drop. Obviously, most companies would, give their right arm for that kind of growth. But client-wise, still supportive. Despite, that $185, $190 mark, that's all-time highs for Facebook. But our clients are still pretty supportive of the stock around those levels. Like I said, there is room for a bit of investor disappointment, say if investors choose to take those revenue figures the wrong way. However, I think long-term our clients are still very supportive of Facebook around those all-time highs.
Okay, well, let's move on to Amazon. What are they on the year? Up 20%.
Yeah, and that's on top of a 54% rise in 2017 as well. Absolutely bonkers. But, it's one of those stocks that sort of just, day-to-day common sense. If your layman was to pick what company do you think would be doing well, it'd be Amazon. I think it's something like, it's maybe going to be this year like 44 cents of every dollar spent online is going to be at Amazon. Like, that's scary levels of sort of dominance in that market. In terms of its figures, third quarter figures in October were pretty fantastic. Revenue was up 34% to $43.7 billion. I think that was like $1.5 billion more than expected. Earnings per share, they were expected at 3 cents per share and coming at 52 cents per share. So that was a colossal beat. I think operating income was down like 40% to 347 billion, but investors sort of just weren't really bothered. Like, that kind of earnings per share and revenue growth, that was enough for them basically. Whole Foods seems to have been a pretty savvy purchase. Like, even though Whole Foods wasn't doing great before Amazon bought it, the way they've, sort of implemented that company within their larger scheme of driving people towards Prime subscriber growth and things like that seems to have been very successful. In terms of its figures this week, I think Amazon itself is expecting like 28 to 38% rise in revenue. And that's going to leave it between $56 billion and $60.5 billion for the quarter. I think the reaction might lie more on operating income, because I think the forecast for that between $300 billion and $300 million, and $1.65 billion. So that's a pretty wide bracket for people to try and gauge. So I think in terms of the reaction on Thursday, it's going to be down to where that operating income falls on that pretty wide margin. In terms of our clients, I can't think of a stock, at least in recent memory, that our clients have been more behind and more aggressively buying than Amazon, despite it being at all-time highs, despite, uninterrupted rise. We're barely a month into the year and it's up 20%.
Yeah.
Like, our clients are wholeheartedly behind Amazon. And I think even if it does, it's one of those stocks where it's each quarterly report is sort of a tightrope between expectation and investor satisfaction, and can Amazon manage both of those sides of the things? It doesn't take a lot for investors to choose to be disappointed in stocks like this, especially with a 20%, 21% climb since the year began. However, I don't think that really matters to our clients. I think in terms of just long term, it's hard to argue against Amazon, really, isn't it?
Okay, well, let's wrap up with Apple. Down 1% in 2018. That chart doesn't look nearly as good as the previous two. What are your thoughts there?
Yeah, it's interesting. Like, again, Apple's still up 46% across 2017, but it did it in sort of this stop-start way that if you were to zoom out this shot a bit more, you'd see that even though it kept climbing, it would sort of be like gap a bit downwards, have a few really negative days, but then there'd be enough buyers at whatever sort of low it hit to sweep it up to all-time highs. Very, very gradually is probably the wrong word, but it wasn't as smooth a ride as, say, Amazon's was in 2017. In terms of its, just brief overlook of what it did in the fourth quarter back in November, again, it was sort of fantastic figures, 12% rise in revenue to 52.6 billion. That was like 2 billion, higher than analysts had forecast. Earnings per share up 24% to $2.07. iPhone sales were up 2% to 46.7 billion. I think that was $500 million more than was forecast. And those figures are remarkable. But that's sort of one of Amazon's just like a duff quarter in terms of their overall year plan. That's one of their okay quarters. So we're sort of heading into Thursday in what might well be, if it meets expectations, like the most successful quarter of a public company ever, basically. I think revenue's expected to be between 84 billion and 87 billion. They released like 3 new phones last year, so they've got a massive swath of sort of new products to boost revenue. And I think even if it comes in at 84 billion, that's still like 5 billion more than Apple's greatest ever, quarter. And that likely leaves it on track to beat I think it was January 2016, it managed 18.4 billion in that quarterly profit. And I think that was the single greatest profit for a public company ever. And with revenue like that, it's likely going to beat that on Thursday. I think iPhone sales are expected to break 80 million units shipped for the first time of a quarter. Just mind-boggling numbers.
But we can't live without this technology, right?
Yeah, exactly. So obviously our clients heavily buying around, 167, 170. I guess the thing to say with Apple is Facebook and Amazon are still up on the year, but Apple has sort of pulled back in the last week or so. So there is room for room for it to jump back towards $180. Like because it's pulled back so sharply in the last few sessions, it's heading into Thursday with sort of room to spare on its chart. Really, like it can get back towards, it could jump like $10 per share, and it's still not at all-time highs. So I think that's why our clients have been so heavily buying the stock around those levels, because it has pulled back a bit in the last week.
Connor, great stuff. We'll see you same time next week.
Thank you,
Connor.